I like to buy things on sale, and this is on sale. So, let's just kind of like level set. Fastly is up 513% for the year. Like, that's stupid. Second only to Zoom, which is up about, I think, 648% for the year. These are stupid numbers. And, I don't love the news about TikTok, but, I think we have to consider, really kind of putting some more emphasis on, the time that we're in right now, and so what does Fastly do? All of these virtual events, all of these, this new world that we all live in where we're having to do everything virtually, which I believe will continue even after we get a vaccine. Fastly makes all those things go fast, right? So I do have conviction around it. I do believe in it, and I think it's a good time to buy.
Well, listen, it's going to teach people a lesson on momentum stocks. Live by momentum, die by momentum. You cut your revenue guidance by $2 million, which is like, I think 3.5% or 4% for them. That's it. And the stock falls 30%. I mean, that's the kind of stupid number you're talking about, right? I mean, it's just that momentum matters when you've got those kind of valuations.
Yeah, I mean, that is a little stupid, and that's an official term. But I do still have convictions around the business model. Typically we tend to really kind of talk about the technical aspects of these stocks, and especially these tech names. But you have to consider the time that we're in.
Yeah, another sign of the times maybe is that, and sure, in a lot of our viewers' areas, that the Fedex guy has started renting out a U-Haul because they've, I guess, run out of trucks. They're so busy, in other words, they don't have enough of their own vehicles to meet demand. Stock's been hot, but it's a name you and UPS you continue to like.
Absolutely. So, this is kind of like an offshoot of our tech play. So, we like tech. I kind of created these categories: tech adjacent, and tech enablers. And e-commerce, we really do love to be in e-commerce. It's just the way of the world right now. Even though there was e-commerce before, February 2020, we've all been forced to increase our e-commerce utilization. And I think, again, we're just never going to go back to where we were before. And so FedEx and UPS is a play on that. Whether you're ordering things internationally or domestically, you have to be in both of those names.
And financials, people have said they don't have to be in these names. Like the financials, like energy, have just not performed well at all. I've called Wells Fargo maybe the most important stock in the country, just given its size and its scope for the economy and for people's mortgages. They got another scandal there where 100 employees were fired for apparently taking and misusing stimulus money. By the way, don't do that. Every time Wells Fargo sticks its head up, it's like whack-a-mole. The market puts itself down again. Are there any banks, Tiffany, that are worth owning right now?
Absolutely. And so, I would say that Wells Fargo is probably not one of them. So I really like the investment banks over the consumer banks, but I really want to just kind of make a note here. So, we've recently had a lot of bank earnings between Monday and Tuesday and yesterday, because I don't even know what today is. But we look at like Goldman Sachs, right? So Goldman Sachs, reporting strong markets revenue, right? So bond trading, quarterly revenues up, like 49% from last year, right? So Bank of America, their investment banking business, had its second highest performing year in its entire history. JP Morgan, looking at like trading revenue up 32% from last year, fixed income trading up 29% from the year before. We're comparing they're posting numbers that are beating last year's numbers when we were not in a pandemic. So I'm really paying attention to that. So I do like those names. I like the investment banks. I like the banks with trading revenue. And given the influx of retail investors and really the influx of trading activity over the past, 2 quarters, these banks are really positioned to do well.
Shepard Smith here. Thanks for watching CNBC on YouTube.